Hello, welcome to the weekly technical analysis review for Monday, February the 4th. I'm Rafi Bayajan, currency analyst at xm.com. The pairs we're going to be looking at for this week are the dollar yen, the Aussie yen, and the euro pound. Starting first with the dollar yen pair, we can see that the near-term bias is looking fairly bullish at the moment. RSI has crossed into positive territory just above the 50 neutral level. There does appear to be, though, some resistance around the 110 handle. If the pair was able to clear that hurdle, we could then see dollar yen targeting the 50% Fibonacci retracement of the down leg from 114.20 to 106.45. Above that, we do have the 50-day moving average at around 110.80. We did see that bearish crossover of the 50-day moving average with the 200-day one shift that shifted the medium-term picture to a bearish one. However, if the pair is able to break above the 50-day moving average and then successfully overcome the 61.8% Fibonacci at 111.24, that could then shift the medium-term outlook back to a more bullish one. And then above that, the 112.50 area would become the next target. However, if the 110 resistance level holds, we could then see the pair reversing back down to 109.40, which is a 38.2% Fibonacci. Just below that, there's the 20-day moving average at 109.11, and then lower down, we've got the 23.6% Fibonacci at 108.28. If dollar yen is unable to hold above the 23.6% Fibonacci, we could then see it falling back towards that 9-month low of 106.45, and that would also reinforce the bearish picture in the medium term. Let's now turn to the Aussie Yen pair, another pair that's looking bullish in the short term. The stochastics, though, have crossed into overbought territory, suggesting that a near-term correction, downside correction, could be due. And we can also see from price action, they are struggling to break above the 50-day moving average. We need to see a break above the 50-day moving average in order to see a confirmation of the neutral picture in the medium term, which has only just started to become neutral, having been bearish following that flash crash we saw earlier in January. So if the pair is able to break above the 50-day moving average, so that's currently around 79.50, it could then target the 81 handle. We've got the 200-day moving average in that region, as well as the 78.6% Fibonacci retracement of the down leg from 83.88 to 70.28, and that would also strengthen the upside momentum. And in the more longer-term picture, though, we can see that downtrend that began in September 2017 is still intact. So if the 50-day moving average holds and we see the price action heading back down again, that would extend that long-term downtrend. Immediate support in such a scenario would come at the 78.69 level, that's the 61.8% Fibonacci. Then we've got the 77 handle, a key level, as that's also the 50% Fibonacci. And then lower down, we've got the 75.48, 38.2% Fibonacci, and 73.49, the 23.6% Fibonacci, before prices would fall back towards that 10-year low of 70.28 touched at the beginning of the year. And finally, looking at the euro-pound pair, we can see also there we've got bullish picture in the very near term. The stochastics, though, do appear to be reversing as there's a bearish crossover there taking place. They are in overbought territory. Looking at the RSI, though, it hasn't yet managed to reach the 50 neutral level. So if euro-pound was able to break above immediate resistance at the 0.88 handle, so that's near the 38.2% Fibonacci of the down leg from 0.9111 to 0.8616, and also where the 20-day moving average currently is. So that would definitely help strengthen the upside momentum, and we could see RSI rising more convincingly into positive territory. Not too far higher up, we've got the 50% Fibonacci at 0.8863. It's also where the 200-day moving average has flatlined, and then we can see the pair would be able to then aim for the 61.8% Fibonacci at 0.8922. However, if the 0.88 handle that resistance level holds, Euro Pound would shift back down again towards 0.8730 area. That's the 23.6% Fibonacci, and then breaching that level, we could see Euro Pound making another run towards that 20-month low of 0.8616 that it reached earlier in January, and below that the 0.85 handle would come into focus, and then we could then see the current medium-term outlook, which is still neutral. We could see that outlook becoming more bearish. So that's it from me. Thank you very much for watching, and have a great day.